All right, guys, I'm so excited to bring you this video here today. I've been waiting for this one for a while. I'm going to be investing around $5,000 into my portfolio, the most that I've ever put into a portfolio at one point in time. And normally I talk about dollar cost averaging, spreading it out over time just to mitigate any of that risk. But with my portfolio, I have been doing that so far, and I'm going to continue doing that in the future. I've been cash heavy. I know the market is really high right now. There's a lot of uncertainty about where it's headed, but really I think the most important thing as an investor is not trying to time the market, and rather getting your money in there, let it start working for you so you can start capitalizing on some of the returns. And with me, I reinvest all the dividend stocks, so the quicker I can get those dividends coming in, the more and more I'll be able to reinvest. So I'm really excited to bring you this video. And if you guys are new here, you're just coming to this channel for the first time, well, my name is Dalton and you're on D-Lits TV. I talk about all things investing here with my tips, tricks, and insight into the stock market. So if that's something that interests you, you're definitely going to want to quickly jump down, click that subscribe button, turn on the bell notification. Got a ton of great stuff coming out for you guys, and we are on the road to 10,000 subscribers. Maybe this is the video that's going to do it. It's going to put me over the top, over the edge to hit that 10,000 range. I don't know, you guys will decide. So if you find yourself, taking anything away from this, maybe you're interested, you've seen my content before, consider clicking that subscribe button. It means a whole lot to me. And if you do take away anything from this video, just hit that like button. It would mean the world to me. It promotes it on other homepages, gets the message out there. But anyways, guys, enough of that stuff. Let's get into some of these investments. All right, so guys, right now I have the Robinhood app open. You can see my buying power is at $5,100. Something that absolutely blows my mind is how long it took this money to clear and transfer into this account. And that's kind of one of the reasons why I really like crypto and focusing on, Bitcoin and stuff like that, because with some of the cryptocurrency, I would have had immediate access to these funds in this account. Basically, it would transfer right away. And right now, it took about a week for me to actually get these funds from my bank account into the Robinhood app. Something that makes no sense to me here in 2021, where technology is at. You should be able to have immediate access to all of your money, no matter where you are, if you're transferring between accounts. That's just something, it kind of blows my mind. But anyways, it's enough about that. Let's talk about some of these investments that I'm going to be making. And these are ones that, I put a lot of time in. I've actually been investing in a lot of them in the past before, but there are two new ones that I'm going to be adding to my portfolio that I'm going to be talking about. And one of them, let's kick it right off the bat with some that I've already been investing in, and one that I see a really great opportunity to buy into right now, and that's going to be AT&T. So AT&T right now, the price is at $28.68. Why I like AT&T is because, they have been on the dip for a little bit now. If you look over the past year, they still haven't recovered to the pre-COVID situation that was going on. And there's a lot of great stuff that's happened recently for AT&T. They're making headlines right now. They're really trying to ramp up their 5G commitments. They're aiming to raise around $14 billion to buy 5G spectrum. So it's going to be really interesting. It's basically a race between all of these 5G companies, trying to get the best and being able to offer the consumers the best that they possibly can. The other thing about AT&T is that their HBO subscriptions are now through the roof. They've been on the increase. They don't show any signs of slowing down, which really honestly surprised me with all the competition out there, Netflix, Hulu. There's so many different competitors out there, and it's really, like I said, it's a competitive industry. So there's a lot that goes into it, but AT&T has been on the up and up, and they've been doing well. And also, analysts from Raymond James were quoted saying that they've upgraded AT&T's stock. They think there's a lot of potential for it in the near future. And again, it's nice to see that other validation coming in. But with AT&T, they focus on, around a 7-8% dividend yield. That's kind of fluctuated a little bit, but obviously AT&T has been doing super well. And one of the reasons why the analysts like them is because they believe that it's feasible for AT&T to offer that high dividend. They don't really show any sign of slowing down. And there's a lot of great stuff with AT&T coming out. So today, the first $1,000 that I'm going to be using from my $5,000 is to buy $1,000 worth of AT&T. And I always do a limit order. Some people ask why. Basically, what this means is if I set this limit price, it's not going to buy for anything higher than what I set it at. So I usually do this. I'm going to go ahead, click continue. I think I can get what, like 39, 35. Yeah, 35 shares, $1,003. I'm going to go ahead, review, swipe up. That's one of the biggest investments that I've made into this portfolio in a very long time. You can see my new position if you go into the stats of AT&T. 68 shares owned, average cost at $29.53. So I am driving that down. and then, down 3% on it. Sometimes I like to invest in those stocks that I'm already down on, just dollar cost average my way into them even more. And that's exactly what you see here. So a lot of great stuff. We'll see if it pays off in the future, but for now, that dividend is going to be rolling in. And at the end of this video, I'll compile, all of the dividends that I've added to this portfolio, what it's looking like, the projections for it, and I'm really excited to show you guys that stuff. So make sure you stick around to the very end. And then the next stock that I want to talk about is one that is a little bit more, I guess, risky, a little bit more questionable, but still offers a really, really great dividend. And it's been in the news a ton lately, and that's Pfizer. The reason why I'm so interested in Pfizer is because a lot of the stuff with the COVID vaccine, a lot of things that have been coming out, they actually denied government funding at the beginning of the vaccine process because they wanted to be able to sell it and profit from it as well. So they have a lot of fierce competition, with the Moderna vaccine. But the thing is with that, Moderna, they don't actually necessarily profit from it because they accepted that government funding. So Pfizer's in an interesting position where they're actually getting some financial value out of this vaccine. So it's really interesting to see where they're going to be headed. And it's interesting, if you look at their stock today, they're down 1%. Over the past month, they're down 11%. I really do think that this is potentially a pretty solid buy-in point for them. And that's another reason why I wanted to go with Pfizer. If you scroll down here on the stats on Robinhood, it lists their dividend yield at 4.02%. Thing about Robinhood is that they're not always 100% accurate. You're definitely going to want to look this stuff up online. Really important to note this stuff. If you guys missed the video that I talked about my Democratic investments for the year of 2021 with the president being Joe Biden, then you're definitely going to want to check this video out right here. It's got a lot of great stuff, a lot of great information. It kind of helps back this Pfizer position, but also might give you some insight into some of those other investments that I'm going to be making as well. So Pfizer, I'm going to go ahead, trade, click buy. All right, so right there, I'm getting 28 shares at $36.81 for an estimated cost of $1,030. Swipe up, boom, just like that. This is great stuff. I'm so excited to see where my dividends increase to in the following months and year. So Pfizer is the second one that I wanted to talk about. The one after that, this is one that's very solid, Johnson & Johnson. I'm sure most of you are well aware of Johnson & Johnson. That's the thing, a lot of my investment style, it might be a little bit boring to some of you guys, might be, it's not that exciting. If you look at my chart, it's pretty steady. The reason why I love doing that is just because it helps me sleep at night. I'm very confident with this method. I do have other investments that focus on growth in other portfolios. I've also got a 401k. I've got a few things rolling in. And for this particular portfolio, I really love dividend payments. And I think that a lot of people, when they first enter the market, they're worried about, the volatility. They really don't understand how the stock market works. And I think dividend investing, grassroots, blue chip companies is a very solid way to go if you're skeptical at all. That's what I like doing. And obviously, guys, in this entire video, I'm not a financial advisor. This is for entertainment purposes only. So if anything, just don't copy blindly what I'm doing. Make sure you do your own research into these stocks, these investments, so you guys can feel confident with the investments that you make in the future as well. Okay, so one of the reasons why I love Johnson & Johnson is because they fall within the dividend aristocrat family. And if you guys don't know what dividend aristocrats are, basically dividend aristocrats have been increasing their dividend payments for the past 25 plus consecutive years. And there's a lot of great companies within that list. So maybe you're thinking about becoming a dividend investor. Well, I would say that that's a solid list to start looking at. Dividend aristocrats and then also dividend kings. Dividend kings have been increasing their dividend payments for the past 50 plus consecutive years. So Johnson & Johnson falls within the dividend aristocrat list. They've always had a solid dividend payment. And the thing about Johnson & Johnson that I really like is their diversification with their product line. So I believe they're listed as a healthcare company, but they've also got consumer products. Like they've got so many different segments that they cover. And basically, if something has an issue, like in the past, they've had some negative publicity. I think some of their baby powder had something really off, like asbestos inside of it for some reason. Their stock dipped just a little bit, but pretty much, it's going to be level. It's going to level back out and it has increased. So the thing about that is right now I'm up 8.85%, but I'm still comfortable investing in Johnson & Johnson, knowing that I'm going to be holding this company for a very long time. So I'm going to go ahead, click trade, click buy, again, do the limit order. All right, now if I look at Johnson & Johnson, I'm up 3.84% on them. My average cost is $151.46, and that's still, a small percentage below where it is on the market today. So a lot of room for growth here. One thing that I wanted to make sure that I did in this video that I touched upon was sort of the ETFs that I look at when I'm looking at dividend investing. So this is SPHD. You guys, if you watch my channel, you know exactly what this is. It offers high dividend payments, but low volatility. It focuses on those stocks. It's really, really stable. If you look at the chart over the past 5 years, pretty much before everything with the pandemic, it was looking like a slight steady increase. And, it was hovering around that $40 range for a very long time. Right now it's at $38.70. But I think, given the opportunity in the future to grow, it'll get back there. If you look at how much room there is potentially, that's like another 10, 13% from where we're at today. So I do think, even though SPHD, it focuses on low volatility, I think there's a lot of money to be made in a lot of these stocks, a lot of these ETFs, where there's been pre-COVID issues that happen, and then COVID kind of hits, things start ramping back up. And as these stocks start doing well, this is going to bounce back. So like I said, if you started investing down when it was $27 in this, now at 38, that's a pretty solid return over a short period of time, over 20%. So a lot of people look at something like this and they're saying you need to be more risky with your investments. You're younger. I kind of agree with what you're saying, but this is the thing I'm comfortable with doing. I love dividend payments. I love reinvesting these. This is something that pays you every single month, knowing that I'm getting that influx of money that's not going to change every month, regardless of market conditions, really makes me feel comfortable as an investor. But one thing I wanted to do in this video was talk about a new ETF, compare it to SPHD just a little bit, talk about why I'm picking up positions in it, and that's going to be SCHD, which is also focusing on high dividends. So if you look at SCHD, another thing that people comment about SPHD is that high expense ratio of 0.3%. Well, that's something that I looked at SCHD for because of that reason. Now, SCHD has an expense ratio of 0.06%, so significantly lower than SPHD. The net assets in SCHD is $16.3 billion worth, while SPHD is $2.53 billion. There's a lot of things to consider when looking at these two. SPHD offers a much higher dividend yield at 4.89%, while SCHD offers a little bit lower at 3.16%. Now, if you look at something like their past 5-year chart, you can see the SCHD ETF has gone up nearly 80%, 79%. If I go back into SPHD just for comparison, you're going to notice it's a lot more stable. It's not going to be up as high, but as I go into it, as I drill down 5 years, up 19%. So there's a big difference right there. I think there's a lot of great different ETFs that you can invest in as a dividend investor. These are two of my very favorite, and I've known for a while that I wanted to start investing in another ETF as well, as I hold positions in SPHD. The other thing is SPHD, as I mentioned, is a monthly dividend payer, where SCHD pays quarterly. It doesn't make that big of a difference. It still kind of evens out in the end, but just something to keep in mind. So again, I'm going to go ahead, click trade, click buy, go buy on the limit order. I've got around $2,100 left. Do $66.31. I always set it usually a cent higher than what the market's currently at, but it doesn't really matter. Continue. I'm gonna go ahead and buy 15 of those, review, swipe up, here we go. And just like that, another $1,000. This has been rolling. Oh God, I can't even tell you how good it feels to get this money into the market. I've been waiting for this moment, like I said, a very long time. So very happy with this stuff. And then the last stock that I wanted to focus on was one of those that I kind of mentioned in the Biden video that I talked about before, but I want to get into energy. I want to get into the energy sector, and there's a lot that I considered investing in. I actually wanted one that offered a dividend that also had renewable energy, that was focused on some of the alternative energy sources. And there's a number to consider, but ultimately I ended up going with NextEra Energy, and I actually have invested in them before. Haven't talked about it much on this channel. I'm just looking for that investment right here. You can see on the day they're up 2.22%. I think when you look at what is going to do well in the upcoming year, there are 3 industries that I think are going to do extremely well. One is healthcare, the other one is energy, and then lastly, I think just traditional financial institutions. And the reason why I think financial institutions is because there's been a lot that's happened with the pandemic where they needed to allocate money to sort of fight against it. And they're basically were backing, saying that people aren't going to be able to pay back loans. Well, that's happening much quicker than they anticipated. So all this money that they pretty much said that they were going to lose out on, they've been able to recoup pretty significant numbers from it. And that's why not too long ago, I actually said I was investing in JP Morgan. That was one that I wanted to focus on. If you look at that, since I made that investment, I'm up 15%. So that's something to consider. That's one that I wanted to get into more. I just didn't have the funds in the account quite yet. Unfortunately, it went up a ton in value since then. And I can't even say that's unfortunate because as a long-term investor, the pricing right now doesn't necessarily matter as long as I think it's going to be higher in the future. But anyways, NextEra Energy, not the highest dividend yield. I believe it's 1.8% right now. But there's a lot that I think is going to come out of energy stocks. And if you didn't know about NextEra, they operate in Florida. What I see from NextEra Energy is a healthy mix of what they actually offer. So it has 24 gigawatts of renewable energy capacity with 16 gigawatts being wind. That's 67%. They've got 3 gigawatts being solar at 13% of what they offer. And then they also have 3 gigawatts of nuclear at 11%. They're working on a partnership, which I believe is going to add around 16 more gigawatts. They've got long-term contracts, a lot of great stuff from them. Again, in Florida, a lot of great stuff. So happy to be able to invest all this money into NextEra, and I'm really excited for what the future brings for not only NextEra but also just the industry as a whole. I believe, you know, Tesla, the electric vehicle market, all this stuff is going to do well, and this is kind of the tip of the iceberg. This is what we needed to happen in order to start getting those funds into renewable energy. There's going to be a lot of things that are passed in the upcoming years that really focus and help companies establish that are within those industries. So I'm really excited to see some of the new those new things come out. All right, so real quickly, I want to talk about the implications that made on my portfolio in terms of the dividends I'm receiving, because that's what it's all about. So I took a screenshot of the Track Your Dividends website before I inputted any of the values to get an idea on where I was at, where I was headed, and I'm going to show you a few different things here. So overall, this was before I made the investment. The portfolio value was around $11,000 with 3.21% dividend yield. My yield on cost was 3.63%, and my annual income was $367. And now afterwards, this is what it looks like after it's all been updated. So I'm now up to $16,000 plus. The dividend yield is 3.39%. The yield on cost is 3.71%. And the annual income is $569. One of my very favorite features of the Track Your Dividends website is looking at those upcoming dividends. It basically projects how much you're going to be making per month for the next, year. And it's really interesting stuff here. Some of it jumped up pretty significantly. So you can see at the end of February, it looks like I'm going to be taking in $50.60. The highest that I'm going to be making in 2021 so far is going to be $69.78. Now keep in mind, this fluctuates as I add more and I reinvest all these dividends. These numbers are going to continue to grow, and it starts off really, really slow. And you might be looking at this and you might think, that's not a ton of money, but just hear me out. Come back in, 10, 15, 20 years. These numbers are going to be so much higher and it's going to be looking great. Now, another thing I like to look at is the future value. I've showed you guys this on a number of different videos, but essentially, if I do not invest any more money, right now the portfolio value is $16,763. By the year 2030, it would go up to $25,902, just basically off reinvesting those dividends. And then 25 years from now, this is so interesting to see. You can see it's really an exponential growth factor going on with investments. And this is the snowball, the compound effect that I always talk about, but it goes up in the year of 2045. We go from this $16,000 portfolio. I'll slowly kind of go through this if you guys wanted to see the growth projections. And then you can see by the year 2035, we're up to 38,000, continue on from there all the way up to 2045, where it's over $144,000 just off of what's in there right now if I weren't to add any money to it. That's so crazy to me. Now, if you look a few videos ago, this was $98,000. So you can see that little amount that you add into your portfolio, if you keep doing it, it's just going to grow exponentially, and there's a lot of great stuff coming out of it. So anyways, guys, that's all I got for you in this video here today. If you enjoyed it, took anything away, you liked it, make sure you actually hit that like button. It really does help me out. Again, puts it on other homepages, gets the message out there. Again, if you're not subscribed to the channel, trying to hit 10,000, we're on the road to 10K. Would love to get there soon. Let's make it happen. Anyways, guys, thanks for checking out this video. Have a great day.